Hi, Charters. How are you all? I believe everyone is good. And CFC exam also went good. On behalf of BEI, Bhagwati Education Institute, my name is Sandip sir. I am discussing full answer script of business economics question which was held on 20th January. You can see in your screen the question which I have typed. Before I start, one small clarification I will give you. CFC rule is the reshuffle question. That is, if student 1 has got number 1 question as money created, doesn't mean that second person will get number 1 question as money created. It could be compute total credit or anything. Not to worry. What I did, I checked 5-6 question paper and typed on this 100 questions. Maybe it is reshuffle, but total question are same. So for your reference, I typed it and I'm discussing answer on the basis of the type serial number. In your question paper, you cross-check answer script. So number 1 question is money created by commercial bank. Which one is the option? Number A is high-powered money. Sir, high-powered money is what? Total monetary base. Real money is what? Total money divided by price. Fiat money is what? The money which is authenticated by RBI. So credit money is what? What is the job of commercial bank? Commercial bank job is what? Suppose they start with 1000 rupees, by rotating it becomes more than 1000, say 10,000. Ultimately, what is the process of credit creation? Here full process is not required. For your reference only I am showing you this. Del M equals to 1 by CRR into del I. Achha beta, what is del M? Del M is change in money supply. What is del I? Nothing but primary deposit. What is CRR? It is nothing but cash reserve ratio. So depending on this primary deposit and cash reserve ratio, money supply would change. This formula will recur in other question. That is why I discuss here. So here option should be what? Answer should be what? Will it be A? No. Why? High-powered money is total monetary base. Will it be B? No. Real money is what? Total money divided by price. Will it be fiat money? No. Fiat money is what? It is nothing but money authenticated by RBI. The money created by commercial banks should be what? Credit money. Clear, beta? Good. Now question number 2. Under the concept of money supply, the term public. Those who are interested, they can see or write whatever you want. The term public. I am giving the logic over here, sir. It will be helpful for you. The term public implies, in economic term, household, institutions, firms. I repeat, households, institutions, firms or business sector, excluding government and banking system. I repeat again, the term public implies comprising of household, institution as well as business sector or firms, excluding government and banking system. The question is what? Under the concept of public sector money supply, public do not include C, government and banking system, excludes. In your study material 8.24 page, it has been discussed also. Correct? So number 1 answer is credit money. Number 2 answer is government and banking system. Maybe in your question paper, you could find numbers are different, but all questions are covered. Question number 3. Carefully follow me. The formula which I have written, it will be helpful here now. Compute total credit money created by banking system if required reserve ratio 15% and primary deposit is 1,20,000 or 12 lakh. So what is this just formula we have just found out, beta? 1 minute. For question number 3, del M equals to 1 by CRR into del I. Del M money change in money supply, CRR money cash reserve ratio, del I money primary deposit. As per question what they gave, CRR they have given 15%. So with your permission, can I write 1.15? Acha, del I how much they have given? Total this is 1, 2, 0, 0, 0, 0, 0. Correct? 12 lakhs. So if I calculate, it is coming as 8 lakhs. So this formula is required to find out this mathematical question. It is there in your money market chapter topic 2, means unit 2. So my answer for question number 3 should be what? Answer is A. Look, for your reference, we'll enclose this question paper as well as in one go answer script. But here I am giving explanation. It will be helpful for you. I believe it is clear for you. Question number 4. Calculate currency with public from following data. This question has come from money market topic 2. Topic 2, money market topic 2 was money supply. Topic 1 was money demand. So topic 2 they have given the question. Question is what? You have to find out currency with public. The data what they gave? Notes in circulation, circulation of rupee coins, circulation of small coin, cash on hand with bank. Careful. Currency with public. So total circulation is how much? 45,000 crore beta. Carefully. They ask you to find out public. So total note circulation is 45,000. But bank cash in hand, bank has 27,500. So to find out public, my first job should be what? Have to deduct 27,500? Yes or no? Careful. Total circulation is 45,000. They ask you to find out public. Public means whatever bank I should deduct. By deducting this, it has come 17,500. Then circulation of rupee coin and circulation of small coin should be there because it is with public only. That is plus 1500750. My answer should come 19750. Calculation clear beta? Once more. Currency with public they ask. What are the data given? Notes in circulation is 45,000 crore. Banks. The bank should be deducted. First I deduct this bank and circulation of rupee coin and circulation of small coin should be added. So my answer should be A. Correct? I believe I could clear this. Now question number 5. What is this? Which is the penal rate RBI lends money above the rate of this. Here one thing I should tell you so that you can understand properly beta. Just a brief things. In 2000, one concept RBI started. Sir, it is called LAF. So beta, what is LAF? Liquidity Adjustment Facility. Under LAF, there are two parts. One is called repo, another is called reverse repo. That was the concept. So that an economy was growing like this way. But it was observed by modern economists in 2011-12, even though after practicing repos and reverse repos, sometimes commercial banks are facing tremendous financial crunch. So what does it mean? The moment they are facing tremendous financial crunch, does it mean that they stop business? No. 2011-12, RBI has come out with another facility, call it as MSF. Acha beta, what is MSF? MSF is nothing but marginal standing facility. Concept is what? Even though commercial banks is fully crunched out with liquid money, they can even borrow money from RBI with some penal rate, maximum 1%, known as MSF. So concept is what? Your common sense. Highest rate should be what? MSF, marginal standing facility. Second should be what? Repo. Third should be what? Reverse repo. Today's data, you can see MSF is 6.75%, repo is 6.50, and reverse repo is 3.35. Why I gave this? So that my bacha can understand. Sir, it is called corridor of rate interest rate. MSF is always highest, aligned to bank rate, followed by repo, which is borne by commercial bank, reverse repo, which is borne by RBI. That is your basic concept. So now Aram you can answer that. Number 5, penal rate, RBI lends money to bank. So of course it should be marginal standing facility, means MSF. Now number 6, liquidity adjust. I believe that is why I explained this. 2000. So that synchronize, you can synchronize the question back. 2000 LAF has been introduced. LAF is what? Liquidity adjustment facility, which has got two parts. One is called repo, another is called reverse repo. And which committee it has been? It is done. The committee is Narsimham Committee. The famous committee. For your ready reference, sir, 1991, when you came out with economic reforms, this is the committee, Narsimham Committee, which gave all financial reform data. Simple thing I'm telling you, sir. At the time of exactly before economic reforms, that is late 80s, CRR SLR was more than 53.5%. The Narsimham Committee said, "Arey, why you are blocking money in RBI only? You should let money flow." They dropped down the CRR as 4% or something and SLR as 21% something. Why I am saying is because this is a Narsimham Committee which took a perfect reforms in financial sector. There are 4 reforms: financial, industrial, and others. But here Narsimham Committee is the main key player of giving financial reforms. Now back to question answer. I'm not giving only answer. I'm giving concept also, so that interested student can take care of this. So 6 question answer is A. I repeat, question number 1 answer is D for Delhi. Question number 2 answer is C for government and Chennai. Question number 3 calculation I showed you, A for Ahmedabad. Question number 4 answer is A for Ahmedabad. Question number 5 answer is B for Bangalore. Question number 6 answer is Narsimham Committee. Question number 7. Now, not tariff. There are different types of tariff. The question what they are given, I'm just explaining, sir, it will be helpful for you. Sir, one is called specific tariff. So look at the question, it will be helpful for you. One is called specific tariff. Specific tariff is what? Based on quantity. Another is called ad valorem tariff. It is what? Based on value. Suppose you want to import 10 quintals of rice. The specific tariff is on the basis of 10 quintals. Ad valorem is what? You do import one BMW car. It depends on the value, not on quantity. And escalated tariff is what? There's a typical type of tariff. What is that? For raw material, some amount of tariff, but when it is making a semi-finished product, the tariff would be more. Look what is written. System where nominal tariff on imports of manufactured goods are higher than nominal tariff rate in intermediate inputs of raw material. So for example, for iron ore, in Indian economy saying you, iron ore, if you want to import that, the tariff is say X percentage, but when it becomes iron goat, semi-finished product, tariff becomes X plus 2%. So what does it mean? It is called escalated tariff. The escalated tariff is what? For basic raw material, it is some percentage, whereas when it is semi-finished goods, it is more percentage. So 7 answer should be number A. Now, question number 8. What is written? Which of the following is a method to protect human, animals, and all? Okay. It is, sir, it has come from public finance portion, that is called non-tariff measures. Sir, under non-tariff measures, there are two parts. One was TBT, another was SPS. TBT is technical barriers to trade and SPS is sanitary and phytosanitary system. TBT was for food packaging and all, whereas SPS is for protect human, animal, plant life. So, I repeat again, it has from international trade part, that is called tariff and non-tariff part. Non-tariff part, under non-tariff part, it has got two parts. One is called TBT, another is called SPS. Under TBT, it is for food and non-food item, packaging and other things. For SPS, it is called human and animal planet. So, 8 answer is A for Ahmedabad. I believe it is clear for you. Now, number 9. With regard to international trade, European Union. So, sir, what is free trade area? Free trade area means member countries are getting facilities for nominal trading fees, whereas for non-members country, external tariff they can individually determine. Suppose their country India, say Australia, say England, they are all member countries. So with their member country, they are getting facilities. But non-member country, if England want to deal with any non-member country, say Tunisia, so they can make their own tariff. Australia can make their own tariff with Tunisia. Whereas for custom union, what is happening? For member countries, it is same. Member they establish as same. But non-member country, external tariff, for non-member countries, they made a common tariff. I repeat again. There are difference between free trade area and custom union. Free trade area is what? Where member countries allowed the same thing, but external tariff, they can individually determine this. Whereas like India, Australia, England, they are making own, okay. But England, if it is trading with Tunisia, non-member country, they can charge X percentage of tariff, but Australia can charge X 1% of tariff. Whereas custom union is what? Which is done by European Union, that external tariff should be common. Why I said all these things? So that my bacha can understand. 9 answers should be D for Delhi, Customs Union. Question number 10. Factor endowment. Factor endowment is a part of international trade, sir. I'll come, this question has been given here. Under international trade, there are different parts. One is called absolute advantage, given by Professor Adam Smith. Another is called Ricardian theory, comparative statement. And Professor Hexer and Professor Olin has given modern concept of international trade. Modern concept is what? They emphasize on two terminology. Suppose if I am talking about Indian economy, beta, which one is abundant, capital or labor? You'll answer that. Answer is labor abundant economy. If I am talking about USA, beta, which one is abundant, capital or labor? Obviously it is capital. So Indian economy should emphasize production on labor intensive technology, that is consumer goods, correct or not? Whereas US economies will emphasize on capital intensive goods, that is capital goods, correct? So the economy, those who are abundant in any input, they will emphasize factors on that input so that they could produce goods. This concept is known as factor endowment theory or factor endowment concept. Endowment means availability of the factors. India has labor abundant, USA has capital abundant. So my answer should be factor endowment theory is propounded by modern economics, Hexer and Olin. I believe it is clear for you. Now question number 11. What is the question number 11? When tariff is calculated on the basis of specific content to imported goods. So what I said, there are different types of tariff: compound, ad valorem, technical, and mixed tariff. I said earlier also, specific tariff is on quantity, ad valorem tariff is on value. Compound tariff is nothing but specific plus ad valorem. Mixed tariff is either specific or ad valorem. Technical tariff is on the basis of technical specification. I repeat again, because a lot of questions they have given. Specific tariff is on the basis of quantity. There is 10 quintals of rice put on tariff, but you have to take care on BMW, say 2 crore rupee on value. Compound is what? If Indian economy wants to make it more costlier, then they put first specific, then ad valorem, make it huge costly for other country for import. Technical mixed tariff is either this or this. Which one is more? Indian government will take care of that. Technical tariff is on technical part. So answer of 11 should be Delhi. Now I believe question number 12 you can answer only. Which tariff is expressed either on the basis of value of imported goods? Value. So it is ad valorem. On the basis of unit measures, that is specific. Either ad valorem or specific. That means what? Would it be specific ad valorem compound? Compound I said. It is first specific, then ad valorem becomes compound. So answer should be here C. Carefully the concept. First one is technical tariff on the basis of technical. Before that I said you what is called specific tariff, what is called ad valorem tariff. On the basis of that we found out compound tariff is a summation, mixed tariff is either of two, technical tariff is on the basis of technical specification. So here answer should be C. Question number 13, theory of comparative advantage. I just give you an idea, sir. First, Adam Smith, 1757, he has given idea for absolute advantage theory. My dear, what was absolute advantage theory? Say two countries, say A and B, two goods. Average cost for country A is 10 rupee, for country B it is 2, for Y commodity it is 20, it is 10. So average for cost for country A to produce commodity X is 10, whereas average cost for country B to produce commodity X is 20. So where average cost is less? Obviously country A. So country A will specialize and export commodity X to country B, whereas country B will specialize and export commodity Y. That was Smithian approach. 1817, Ricardo has given more conceptual approach that is known as comparative advantage. But what is this? Same average cost. I am taking Ricardo's example. He took two countries, Portugal and England. Two commodity, wine and clothes. Average cost say 80, is 90, 120, 100. Those who are serious bacha, please carefully follow me. For Adam Smith, if average cost is less, aram se trade can be possible. Whereas for Ricardo, you just look, sir, Portugal has average cost less for wine as well as clothes. England has average cost more for wine as well as clothes. So as per Smith, trade is not possible. But Ricardo has given more advantages or advance of a concept known as comparative concept, comparative advantage. How did he give this? He gave this by opportunity cost. Acha beta, what is opportunity cost? When Portugal is producing 90 units of wine. How much is foregoing close? Sorry, when Portugal producing 80 units of wine, how much is foregoing? 90. The opportunity cost for Portugal to produce wine is 90 units of cloth, whereas 90 units of cloth opportunity cost is 80. So Picard has given opportunity cost concept. Why opportunity cost concepts are the new table would be those who are serious students, advanced students, for them I'm giving you, sir. Portugal, England, wine and cloth, 80 by 90. Why? Because 90 units is foregone for 80 units. For 1 unit is 80 by 90. This way it is 90 by 80. Here it is 120 by 100. It is 100 by 120. So opportunity cost table, how much it is coming? Portugal wine cloth, England wine cloth, 80 by 90. It comes to 0.89. It comes to 1.125. It comes to 1.2. It comes to 0.8. So what does it mean? Portugal opportunity cost for wine is 0.89, which is lesser than England opportunity cost for wine, whereas for England opportunity cost for clothes is 0.8, which is lesser than 1.125. Careful, why I said this. Where Adam Smith could not get the conclusion, he said that trade is not possible. Ricardo said, yes, trade is possible with competitive advantage, not only absolute advantage, but competitive advantage. So Portugal will produce wine and export. England will produce clothes and export. That is for your concepts part I am giving you. I am not giving only answer. I am developing your sense also. So that 13A answer is David Ricardo, 1817. He has given that concept. 14. It is Indian economic question, database question. So answer is NDAP. What is NDAP? National Data and Analytics Platform. It is started in 2022 by Niti Aayog. I believe my bacha knows that Planning Commission was withdrawn, and when new government has come out in 2014, Planning Commission was withdrawn and Niti Aayog and thinking tank has come out, and under Niti Aayog so many good things has come out. One of the good thing is NDAP. What is that NDAP job? They are to provide more conceptual and rich data of ecosystem. NDAP means what? National Data and Analytics Platform. They give rich and more ecosystem data so that Niti Aayog can take a good decision on this. Answer of 14 is C for Chennai. 15. 15 answer is B for Bangalore. That is FAME India. Sir, what is FAME India? They has started in 2015. What was their job? Their job is for pollution control. They started for pollution control, means only petrols and all would be problem for an economy. So that is why they started a new concept in 2015 known as FAME India for electric or electronic car based. That is called mostly known as pollution control measures. So 15 answer is B for Bangalore. Indian economic question. 16. Which act was initially aimed for regulation of large firm? Sir, monopoly means what? I believe student knows that single seller, large number of buyers. So to restrict monopolies, in 1969, that act has come out known as MRTP Act. MRTP means Monopolies Restrictive Trade Practice Act. 1968, 69 it has come out. So 16 answer is D for Delhi. 17. It is a question of trade part. G20 member. India is a member. Argentina is a member. Mexico is a member. But Tunisia is not a member. So 17 answer is C, Tunisia. Now 18. It has come again, International Trade Unit 5. So there are different types of FDI. FDI means foreign direct investment. Foreign direct investment is what? Suppose mobile industries. Mobile in the USA has mobile service in their part and in India also. Correct? Whirlpool has their production and unit in USA and production unit in India also. So it is called horizontal direct investment. So here what they ask, reciprocal investment. Reciprocal investment is what? Who are specialized in something, they have to reciprocate with other country. What is that? USA. They are specialized in electronics. They are specializing in Amazon. They are specializing in Google. So USA, careful. USA and UK, they make one mutual understanding. USA will make huge setup of Google, Amazon, etc. over here in UK so that they can get the facility. Whereas UK, they are famous for, that UK main is Vodafone, this British telecommunication, Vodafone, and as well as British Petroleum. So mutual agreement is what? UK said, okay, chalo baba, USA, you should take care this facility here so that my people can be beneficiary, whereas UK is giving huge facilities or services of Vodafone in USA as well as huge setup of British Petroleum, which is a famous petroleum. So why I said all these things? So that my bacha can understand. 18 answer is C for Chennai. Two-way direct foreign direct investment. Now 19. Total ban. Achha. It is total ban. Those who goes to newspaper every day, they know that. One mishap was taken care in 2019. Pulwama attack. You remember? Kashmir Pulwama attack by Pakistan. And exactly after this, we put a attack in Balakot by India. Right? One movie also came on that. Pulwama attack is by Pakistan. Balakot was by India. Tough relationship. Exactly after this, India government announced there will be 200% of import duties on any goods and services from Pakistan. Now, 200%. So what does it mean? Total ban. And Pakistan also not sitting back. They also banned all Indian product so that no Indian product should go to Pakistan, and India also made ban so no Pakistani product should come out. Sir, this is called embargo. I could have directly given answer embargo, but those who are watching, carefully, they should know this concept so that it will be helpful for you. Is it clear, beta? Good. 20 is informative question. During British period, everyone knows that industrial sector, they stole everything from us. For your reference, sir, muslin, right? Muslin sari Queen Elizabeth used to take. You know that in one small container you can put full muslin sari. And that UK people, all British people, that colonial economy, they stole everything from us. And because of us, they could make a huge things, cotton and jute, right? So many things are there here. I'm not saying that. So if any interested student, you can contact our BI. We can help you on this. So 20 answer is C for Chennai. 21. Statutory recognition was granted. Sir, for your reference, there are two markets. One is called money market, another is called capital market. Money market is governed by RBI, capital market is governed by SEBI, Security Exchange Board of India, started in 1988, established. But again, for your knowledge, you remember, sir, Scam 92, one movie is there, Harshad Mehta. So exactly before 1992, sir, believe me, SEBI was toothless tiger. Nothing they could do. They could do. No statutory regulation. So Indian government faced that issue by scam 1992. In one day, shish, drastic decrease. So full things are changed. SEBI Regulation Act is changed. In 1992, new SEBI regulation has come out so that SEBI directly could control capital market. So answer should be C for Chennai. 22. In which of the following sector FDI is not permissible? Common knowledge. Aviation permissible, telecom permissible, defense permissible, but atomic energy not permissible. C is the answer. Production of milk. My dear, there are three sectors. What are three sectors? One is called primary, another is called secondary, third one is called tertiary. Acha beta, what is primary? It is nothing but all agricultural things as well as husbandry, poultry, milk production, all things. Secondary is manufacturing and tertiary is full service sector. For your knowledge, as on date, Indian economic service sector has the highest GDP contribution. So production and milk should be answered as C for Chennai. 24. From which onward India followed floating exchange rate? So my students should know two terminology. Sir, one is called fixed exchange rate. For your knowledge first. Till 1991, careful, till 1991, Indian economy was with fixed exchange rate. Sir, another English of fixed exchange rate is pegged exchange rate. It was fixed on the basis of any currency. But 1990, you know that great disasters of Indian economy, and two legendary person, just 1 month back we lost him. One is Dr. Manmohan Singh. Because of him only, 1991, 20th June, he started that we should liberalize economy. And under able supervision of Narasimha Rao, he was Prime Minister at that time. Dr. Manmohan Singh was Finance Minister. Exactly 1991, we started LPG. LPG money, liberalization, privatization, globalization. And that time, due to, on the basis of Manmohan Singh prediction, 1993, instead of fixed exchange rate, Indian government started with floating exchange rate. It is more flexible. What is floating exchange rate? It is dependent on demand and supply. Let the market decide this. If you go through newspaper, you can see that the business portion is written, today's dollar purchase price is this, sale price is this. What does it mean? Every day millions and millions of dollars are purchased and sold because of international trade. So let market determine this. This is the concept. There are two things. One is called fixed exchange rate. Till date, UAE, United Arab Emirates, is following fixed exchange rate, but rest of the world mostly they are using floating exchange rate that is determined by intersection of demand and supply. Now come to your answer. Answer should be 24. Delhi, 1993. 25, usual informative question. Minimum support price is nothing but 1.5. That is C for Chennai. 26. Which policy was adopted to ensure the world-class industrial infrastructure? Sir, it is nothing but PM Mitra. PM Mitra is what? It is nothing but mega integrated textile and textile region and apparel park. What was their intention? It started in 2021, sir. Government of India started this very good thing. What was their intention? To develop with state-of-art technology of infrastructure, mostly on so that textile sector, so that Indian economy should be a hub of industries and world economy will start trading with this with Indian economy. So 26 answer is PM Mitra. 27. Finance Minister was discussing balance of trade and balance of payment. My dear, what is this? C plus I plus G plus X minus M. So C money consumption, I money investment, G money government expenditure, X minus M money export minus import. That is called balance of trade or balance of payment. Balance of trade money only tangible item. Balance of payment money both tangible and intangible item. So what is that? Is it micro or macro? Obviously it is macro. Number A. 28. Which is the following is example of normative statement? So there are two type of statement. One is called positive statement. Another is called normative statement. Positive statement is what? Indian economy is a developing country. Statement. No value judgment. Second statement I am giving you. To make it developed, we should increase saving. I repeat, to make it develop, we should increase saving. The value judgment, when it is statement, it is called positive statement. When it is value judgment, it is called normative statement. So, options should be what then? You can find out now. Will it be B? Will it be C? Will it be D? No, it should be answer is A. Correct? Now 29. When some people start investing money in share market and many people start following the same, means everyone is doing that, I am also doing the same thing. I don't know the consequence. Everyone is doing, I am also doing this. Sir, in demand chapter, he call it as bandwagon effect. So people are doing, society is doing, chalo, I will also do this. Right? So answer should be A. 30. Which of the following does not describe nature of business economics? Common sense, business economics. Obviously, it is not theoretical. Rather, it is pragmatic. Pragmatic means with applied. So normative, obviously normative. Yes, it is art and science both. It incorporates both micro and macro. So here does not money. Answer should be A. 31. Buyers ultimately determine which goods will be produced in what economy. Sir, there are different types of system. One is called capitalist system of economy. One is called socialist system of economy. That is called mixed system of economy. In capitalist system economy, mostly they are facing this sovereignty known as consumer sovereignty. 32. Which of the following is not one of the four basic economic problems? So, four basic economic problem is what? We know that there are different issue of there are basic problem economy, what to produce, how to produce, for whom to produce. These are the concept was there, right? So here, not one of the four basic. Answer should be where to produce. Balance all our economic basic problems. Achha. 33. Excess of price which a following which consumer would be willing to pay rather than go without it. Suppose, basic example I am giving. Suppose you are ready to pay price as 80 rupees. But actual price in market is 75 rupees. So what does it mean? Your total utility is priced into something and total expenditure is priced into that quantity. So your intention of paying price is more whereas you actually pay price is this. So intention is more money and actual payment is less money. That gap is nothing but consumer surplus. Consumer surplus is what? The gap between consumers ready to pay and consumer actually pay. So ready to pay is MU, say marginal utility, and actual pay say price. So any difference should be known as consumer surplus. So here answer is A. Next question is indifference map. Acha beta, what is indifference map? First of all, my students should know the concept is given by Professor Hicks and Professor Allen. What is the concept? It is called ordinal approach. What is ordinal approach? So it is Y, it is X. Consumers should prefer say Y1, it is X1. If he is going for one exchange unit of X2, you should decrease amount of Y because budget is M into PX into X plus PO into Y beta. So budget is same, but you change this combination. Say we are measuring orange here, apple here. So when you are changing more of apple, of course it will decrease amount of orange. So it is called diminishing marginal rate of substitution. Though in question is not required, I'm just helping you. So if I make this diagram better, you can understand more prominently. IC1, IC2, IC3. IC1 gives this amount of combination. IC2 gives more amount of combination. IC3 gives further more amount of combination. If no budget constant is there, to which one you prefer? Obviously IC3. The answer should be what? 34. IC3. Correct or not? So question number 35. Ceteris paribus. When Marshall started this concept of demand, sir, he said that when you consider any concept, obviously you should consider only two variables at a time. A simple example. When price of any commodity falls, what about your quantity demanded? Quantity demanded will increase. Two variables you are considering. If you are considering price, quantity and taste and preference, when price of any commodity falls, your taste and preference changes to other commodity, law of demand does not hold good. That is why Professor Marshall that time has given that when you consider any composite analysis, obviously you should consider two variables at a time. Rest of the world remains same. The answer of 35 is all other things remaining constant. B. Now 36. Slope. Careful. Let me make this diagram so that you can understand. Sir, it is demand curve, correct? Slope is what? In mathematical concept, we know slope is what? Dy by dx beta? Del y by del x. So it is what? Del p by del q. It is nothing but del p, it is nothing but del q. So slope is what? Del p by del q. Yes or no? Basic thing is there, right? Now tell me, demand curve is upward slope or downward slope? Downward slope. The value should be what? Only del p by del q or minus of del p by del q? Correct? I believe most of the students are committing mistake here, right? So answer should be del E. D. No problem. Check that. Minus del P by del Q. Now 37. 37, what is given? Shopkeeper sells two commodity A and B with close substitute goods. Price increases this. Which elasticity is? It is price elasticity or cross elasticity? So it is nothing but cross elasticity. So what is the formula of things? EC is equal to what? Del QX by QX divided by del PY by PY. That is percentage change in quantity demand for X by percentage change in price of Y. So, how much it is percent change in demand? 30%. How much it is change in price? 20%. The answer is what? 1.5. Answer should be 37. Answer should be C for Chennai. Take, sir. It is understood or not? Because I have written all the answer script so that it will be helpful for you. Achha, now supply function. Some student maybe could not do this because of basic differentiation is required. Sir, ES, elastic supply means what? Del QS by del P into P by QS beta, right? Careful. Q is equal to 120 plus 6 into P. Sir, they ask you to find out value of this, correct? Price they have given as 10. I'm writing. Price they have given as 10. Quantity you can find out by putting here 10. 120 plus 6 into 10 mane 120 plus 60 matlab 180. So quantity has come out 180. This has come out, this has come out. What is left? Del QS by del P. What does it mean? To differentiate this, 120 plus 6P. Differentiation mane del Q by del P is equal to, this is constant out, 6. Careful. P value given on the basis of supply equation. Q value found out. By differentiating we get 6. So my ES is what? 6 into 10 by 180. By calculating it should come by 1 by 3. Correct? Answer is B for Bangalore. Those who could not understand, pause it, rewind it and take this answer better. Mathematical it is. 39. Which of the following is not a characteristic of land? Labor is an active factor whereas land is a passive factor. So first thing is, land is heterogeneous. Yes. Your land is fertile, my land is infertile. Supply of land is fixed. Always supply of land is fixed in nature. Land has multiple uses. Today you are using as agriculture. Tomorrow you are making as industry. So land is not active factor, rather it is passive factor. So answer should be A for Ahmedabad. Cobb Douglas. Very good question they are given. Actually, when you consider Cobb Douglas concept, it is actually dq is equal to A k to the power alpha L to the power 1 minus alpha. The concept is that only. So, careful, which one is this? A is a constant, right? Carefully follow me. Q. A option is what? L to the power nothing. It is out. Correct or not? B option is what? K to the power 1 minus alpha. No. It's K to the power alpha. Out. D option is what? K to the power nothing. Out. C option is what? Look. K is equal to K to the power alpha. Instead of alpha, here A or anything whatever written. L to the power this. And C is a constant. That is A. Answer should be C for Chennai. Correct? Which of the following refers to one satisfying power? Suppose if I show you this is what? One pen is a commodity or utility? It is a commodity. Why you are purchasing? Because it has got inherent capacity to satisfy you. So utility is what? One's satisfying power. Correct or not? So as per question, answer should be what then? B for Bangalore, utility. Now 42. 42, what is this? Elasticity concept they are given. ES is equal to what? Change in quantity divided by original quantity. Change in price divided by original price. So change in quantity how much? 2000 to 3200 means So if I write down the formula, del Q by del P into P by Q. So del Q is how much? 1200. Del P is how much? 1800 to 2200, matlab 400. Original price is how much? 1800. Original quantity how much? 2000. So beta, if you calculate this out, out 3, this 9, this 10. So ultimately 27 by 10, matlab 2.7 is the answer. I showed calculation also, so then my bacha can understand properly. Achha. 43. In case of perfect elastic supply, elastic supply is what? Change in quantity supply due to percentage change in quantity supply due to percentage change in price. Correct? It can be 1, it can be greater than 1, it can be less than 1, it can be is equal to 0, it can be is equal to infinite. So is equal to 1 means unit elastic, greater than 1 means more elastic, less than 1 means less elastic. Yes is equal to 0 means perfectly inelastic, yes is equal to infinite means perfectly elastic. Perfect elastic means what is the shape? Supply curve is this. Why? Because ES is equal to del QS by Q divided by del P by P. No change in price. So anything divided by 0 is nothing but infinite. The answer of 43 should be ES is equal to infinite. I believe it is clear for you. Now question number 44, 46. This table they have given. On the basis of table, you have to find out average product, total product, marginal product. Simple sum. Eventually, whatever question bank we have made, it has come from there only. Okay, slowly. Marginal product is given as 11. So first, it is my suggestion, complete the table carefully, whatever required. So total product is what? 10 plus 11 money, 21. In average product, they have given us 11. Quantity is 3. The total product is what? Average product into quantity. So it is nothing but 33. Correct or not? Now marginal product for 4 unit given us 11. So total product is what? 33 plus 11 matlab 44. Correct? Now first question is what? What will be the average product when labor is 6? 6. Marginal product is 8. Exactly before that total product is 52. So here 52 plus 8 minus 60. The average product is what? 60 divided by 6 on 10. Answer should be A. Clear or not? Those who are interested, they can fill full table, but I just show you those basic things only. Now what will be the total product when quantity is 4? Quantity 4. On the basis of this marginal product, I found out it is 44. The question number 45 answer is what? D for Delhi. Correct or not? Question number 46. What will be the marginal product when quantity of labor is 57? Quantity labor is 57. The quantity labor is 5, I believe. Typical mistake it is, I believe. Quantity labor is 5. My mistake, apology for this. Quantity labor is 5. So quantity labor is 5 marginal product. Careful. For 4 total products 44. For it is 52. So what will be the marginal product? Difference? Difference between 52 and 44 is what then? Tell me nothing but 8. Answer should be B for Bangalore. Mathematical question is very interesting. Those who are my students, they already know that. In question bank, same question we have made. 47. Long run average cost. Short run means what? Short run is a period where fixed factor remains same. A long run period is what? All factors are variable. Short run average cost is the plant size, whereas when you consider full length of period, sir, an envelope we got that is called LAC. LAC means long run average cost. It comprises of three returns to scale. One, when average cost is diminishing, increasing returns to scale. When average cost is constant, constant returns to scale. When average cost is increasing, diminishing returns to scale. Opposite language, decreasing cost industry, constant cost industry, or increasing cost industry. So LS is nothing but envelope of all SSCs, or it is called saucer shaped. Answer of 47 is C for Chennai. Who describe production functions, the relationship between maximum amount of output and input required? It is nothing but one of the greatest economists, Professor Paul A. Samuelson. He is called pioneer of modern economics. For your knowledge, 1970 he got the Nobel Prize. 49 is a conceptual question. SSC and SMC. To help you, I am making the diagram, sir, so that one can understand properly. It is average cost, marginal cost, quantity. It is average cost. This is a relationship. When AC is falling, MC is less than AC. When AC is at minimum point, MC is equal to AC. When AC is increasing, MC is greater than AC. First you get the diagram. Then only you can understand that. Now to look at the question. In short term, when AC is false, M marginal cost is what? Lesser than or greater than? Common sense. What should be the answer? Obviously lesser than. Answer should be A for Ahmedabad. 50. Why LSC I showed you, beta? You can understand that. Once more I am showing you so that you can relate this question. Sir, initially when any business sector is enjoying business slowly intruding into long run, initially they are enjoying economies of scale. What is economies of scale? Average cost is total cost by quantity, right? When quantity is increasing more than total cost, sir, it is called economies of scale because it is adding more to quantity than to total cost. There are two types of economies of scale. One is called internal economies within the industry. Another is called external economies outside the industry. And during course of time, internal economies turn to internal diseconomies. Your manager initially it is efficient, it is called managerial economics. During course of time, it becomes mismanagement, so it is called diseconomies. Initially, technical technology is very much lucrative, it is accepting. Slowly, technology become obsolete, so diseconomies. So why I said this? This LSC envelope which you get, initially it is firm enjoys internal economies of scale, and after that it is internal diseconomies of scale. Example of internal economies: managerial economics, technical economies, labor economies, but opposite: mismanagement, obsolete technology, loss of mandates, diseconomies. There is initially average cost is diminishing, slowly this constant, then it is increasing. Answer should be B for Bangalore. 51. One important relationship. Those who attended my CA Foundation class, these people can teach anyone. This is a relationship. MR is equal to P of 1 minus 1 by EP. If I split this, EP minus 1 by EP can I write? Correct? Now look at which is the option then. Will it be A? No. Will it be B? No. Will it be C? No. MR is nothing but P of this. P is nothing but average revenue. Yes or no? Correct? The answer should be D for Delhi. This is a deduction only. Those who don't know, they should take care of that. So from there, before I come to 52, from there I am giving one simple interpretation, sir. Those interested students will love this. Revenue quantity. Total revenue dome shift. Marginal revenue downward becomes 0 here. Average revenue is nothing but started from here. Correct? Double. Careful. MR is equal to P of 1 minus 1 by EP. You can understand properly. We know middle point means EP is equal to 1. Upper portion EP greater than 1. Lower portion EP less than 1 beta. When EP is equal to 1, MR is, if you put 1 value here, MR is equal to what? 0. Look, MR is 0. Correct? TR is maximum. Are you getting my point? Where EP is lesser than 1, say 1 by half, MR becomes negative. Sir, this is the portion. When EP is greater than 1, say 2, MR is positive. Sir, this is the portion. This is called feasible zone of a rational producer. There is a monopoly always intends to take care on elastic portion of the demand curve. Why I said this? So that Rams you can understand this. Total revenue maximum where elasticity is equal to 1. 52 answer is B for Bangalore. This diagram will help you for that. Correct? Achha. 53. When both demand and supply increase the equilibrium quantity. Most of the students will commit mistake because they think it is equal simultaneous percentage. No. Nowhere it is written simultaneous percentage. Careful. This demand curve, it is supply curve. Initial equilibrium is here. If demand and supply both are increasing in a same extent, quantity increases, price remain same. Most of the students answered this mistake. What is the mistake my student has not done, I believe? Has anywhere it is mentioned same proportion? No, na? So same proportion not written means it cannot be price remains constant. So A is out. Correct or not? If it is other than this proportion, so demand increases more, supply increases less. What is happening? Price is increasing, quantity is price increases, quantity also increasing. Correct or not? Now if supply increases more than demand, beta, supply increase more than demand, price will decrease but quantity will increase. Correct or not? Are you getting my point? So when both demand supply increase, careful, both demand equilibrium quantity obviously increase, but we don't know whether price will increase, price will decrease depending on magnitude. So which one is option? Equilibrium quantity, there will be equilibrium quantity will increase, but change in price is uncertain. We don't know whether it is more, less or constant. The answer should be C for Chennai. Careful, beta. Those who could not understand, pause it and repeat once more so that it will be helpful for you to understand. So, identify the correct below condition of equilibrium. It's a perfect competition. Perfect competition is what? Where MR is parallel to the horizontal axis, MC is this. So what are the condition? Condition is, necessary condition is MR is equal to MC. Sufficient condition is slope of MC greater than slope of MR. Careful. MR is equal to MC is here also. MR is equal to MC is here also. So 2 points cannot be equilibrium. There should be 1 point. If I increase quantity, look what is happening. MR is greater than MC, means it is adding more to revenue. If you are a rational producer, will you produce more or produce less? Obviously produce more. Produce more. If it is here, MC is greater than MR. What is happening? It is adding more to cost? No. You should equilibrate here. Now come to point. MR is equal to MC to pakka. But MC is upward slope than MR. But the MC is positive or negative? Obviously positive. So 1 is correct and 4 is correct. Look, sir, I could have given directly answer. Doesn't make any sense. I just wanted to explain you. Our intention of BI is to explain you properly. We teacher of here do this way only. So answer should be what? 1 is the correct form, 4 is the correct form. So 54 answer should be T for Delhi. Correct? Clear? Now 55. Already incurred once and for and all and cannot be recovered. Sir, suppose you have spent some money on your advertisement. Correct? But the product could not be sold properly. So can you take out this cost? No, na? Suppose one railway track government has made, but one per day only one train is passing over there. But it's a cost already incurred. You cannot be recovered this way. Answer should be sunk cost, it is called. Answer is B. 56. Price elasticity demand under perfect competition. Perfect competition, one of the main point is what? Product is homogeneous. My dear, if product is homogeneous, firm is a price maker or price taker? Obviously price taker. If it is a price taker, then average revenue curve would be parallel to the horizontal axis. From elastic concept, we know it is nothing but EP is equal to infinite. Answer should be 56A. 57. Differentiated product. Say television manufacturing company. Sony is producing television. Videocon is producing television. LG is producing television. Samsung is producing television. For me, for you, for anyone, purpose is one only, watching television. But you purchase Sony, I purchase LG. So Sony has got different technical specification, whereas LG has got different after sale service. So it is called product differentiation given by Professor Chamberlain, and the nature of the market is monopolistic competition. So 57 answer is A for Ahmedabad. Market characterized by single buyer. Single buyer. So single buyer is monopsony. What is that? One example I am giving you. Say coal town. Coal town job is what? Only extracting coal only, nothing else. Coal miner employs most of the laborers from there so that they can extract coal from underneath and coal miner can sell it. So sole buyer is coal industry only. Acha, Google. They are monopsony for any technical part of this. Apple. They are monopsony for any app development. So monopsony is what? Single buyer, different type of sellers are there. So answer is Delhi. 59. Initial price P1 is 20. Initial quantity 9. P2 is how much? 19. Quantity is 10. So initial quantity is what? Initial total revenue is what? 180. Change TR1. TR2 is what? 190. TMR is equal to what? 10. 15, and answer is C. Just now I showed you average revenue curve for perfect competition is parallel to the horizontal axis if easily finite. So average revenue curve is also known as demand curve. Answer is A. 61. With a decrease in demand there is. To explain you I am giving help of diagram. Take initial demand curve, initial supply curve, initial equilibrium. Decreasing demand, what does it mean? Demand curve will shift downward, correct or not? So what is happening? Price decreases, quantity also decrease, correct or not? So overall increase in price, is it correct? No. Always to answer this type of question, you need to draw diagram. In copy they give the last page I have seen. My student is given that. Last page they give for rough copy. Could utilize with pencil. Our student did that way only. Okay. So overall decrease in price but increase in quantity, no. Decrease in equivalent price and quantity, and decrease in both equivalent price and quantity, yes. No change in overall price, no. The answer should be C for Chennai. 62. When perfect competitive market earns what if average revenue is more than average cost? Good. Sir, average revenue. AR. Sir, AC. Sir, MC. The equilibrium is where? Where MC is equal to AC and MC is equal to MR and slope of MC greater than slope of MR. So point is here, right? So point is here means what? For this quantity, price is this. For this quantity, average cost is this. So this is nothing but supernormal profit. Yes or no? Those are not my student, carefully follow this, sir. Equilibrium is obtained as MC is equal to MR and slope of MC greater than slope of MR. And by finding out equilibrium quantity, we could observe price is greater than AC, so known as supernormal profit. Answer is B for Bangalore. 63. Soaps and detergent. Again product differentiation. Answer should be C for Chennai. 64. Downward slope, highly inelastic demand. Highly inelastic demand means steeper demand curve. It should not intersect. Steeper demand curve. So steeper demand curve means what? Even if price increases, total expenditure increase. This is only possible if it is less substitute or no close substitute. The answer should be what? Monopoly. Monopoly is a single seller. Correct? Now 65. 65 is what? The value of final goods and services in a country. It is called GDPMP. Sir, GDPMP means in production method, if we find out total production of all goods and services, we call it as GDPMP. If it is GDPFC, we call it as gross domestic product factor cost. Plus indirect tax minus subsidy, we give GDPMP. The answer is A. 66. Very good question. GDP is more than GNP. Before that, I will show you one formula so they can relate this. Sir, GDP MP just now you got. How do I find out GNP MP? It is nothing but GDP MP plus NFIA. Sir, what is NFIA? Net factor income from abroad. Means money goes outside India, money comes in India. So if money goes out is more, it is profitable, and if I am positive, money goes out is less, it is negative. There are three observations so that you can understand. If NFIA greater than 0 beta, which one is more? GNP is greater than GDP? Is greater than 0? Sir, if NFIA is equal to 0 beta, then GNP MP equals to GDP MP. If NFIA less than 0, GNP MP less than GDP MP. Correct? Why I showed this observation? So that you can relate this. GDP is more and GNP is less. Money answer is A. Clear? This is very important. Baba. Achha, 67. If supply is more than demand. Again, I have to make diagram so that you can understand properly. Should not touch the axis. P1, Q1. Supply increases more than demand. The gap of supply is more. So new equilibrium is what? Q2. So what should I write? New equilibrium price will be greater or less? No. New equilibrium price of quantity will be greater than original? Both no. New equilibrium price and quantity lesser than? No. New equilibrium price is lesser than? The answer should be D for Delhi. Without diagram beta you cannot understand. So that is why I showed this diagram so that you can relate this answer for you. 68. In oligopoly, when industry is dominated by one firm. Sir, if I give you, I was just want to ask you, I want to give you burger. Which company you take? Instantly tell me though. Obviously McDonald. Correct? If I give you option for this services, Netflix, Amazon, Hulu, Hotstar, which one you take? Netflix? Correct? Why? Because this McDonald, this Netflix has more than 40% world share. Sir, it is called dominant oligopoly. Dominant oligopoly means they are called output leaders of oligopoly. If you remember 2016, Reliance Jio has decreased the price drastically. 16. That time everyone started decreasing, but most of the service provider become indebted to bank. Correct? So that is called price leadership model. It's called output leadership model for McDonald and all. Why I said this? Price leadership and output leadership, it is known as part of partial oligopoly. 68 answer is C for Chennai. 69. Consumption. So 1936, one of the greatest economists, Professor John Maynard Keynes, has given the concept by his book, The Theory of Employment, Interest and Profit. The concept is consumption is a function of disposable income. What is disposable income? Suppose your papa has income 10,000 say. Can he bring 10,000 at his residence? No. He has to pay tax. Say 10% tax he gave. How much he brought? It's a disposable income. Y minus T. So 16 and answer is B for Bangalore. Clear? Those who want to write, pause it and write down. So MPC. MPC means marginal profit to consume. Rate of change in consumption, that is change in consumption due to additional changes of income, del C by del Y. C is equal to A plus BY. So del C by del Y MPC means nothing but B. MPC is what? The range of MPC is 0 less than B less than 1. Matlab greater than 0 but lesser than 1. The answer should be 70A. 71. Product method or value added method. It is what? Sorry. There are three types of method for NI measurement. One is called production method. Second one is called income method. Third one is called expenditure method. So production method is nothing but known as value added method. Due to double counting, we get production method as value added method. The answer is industrial origin method. Answer is P for Bangalore. 72. Very good question. To find out income. First let me write down equation. Y is equal to C plus I plus G. So what is C? C they have given 8 plus 0.6 YD money disposable income. That is Y minus tax plus I minus 60 plus G money 10. So this Y is equal to 8 plus 0.6Y minus 6 plus 60 plus 10. Now to find out the value of Y, Y minus 0.6Y is equal to 2 plus 70. So Y is equal to 72 divided by 0.4. Answer should be 180. Careful calculation. Those are not my student. Be careful, beta. It would be helpful for you. So once for all, concept would be clear. Nothing but YD instead of YD I have written Y minus 10 and I just put the value like a clerk. Okay. Now question number 73. In economy, investment expense increased by 3,300 crore, MPC is 0.6. Sir, it is a question of multiplier. Sir, what is that? Del Y is equal to 1 by 1 minus B into del I. Del I means change in investment, del Y means change in income, B means MPC, and this is nothing but multiplier. So they have given what? They have given MPC as 0.6, del I given as 300. So I just calculate 0.4 into 300. Answer should be 750. 73 answer is 750D. Full calculation I showed you so that a layman can understand. Acha. Find out GDP. If nominal GDP is this, price index is this. First of all, you should know GDP deflator. Is equal to nominal GDP by real GDP into 100. So another English of GDP deflator is nothing but price index. So 120 is equal to 720 divided by R into 100. If I calculate that, just simple calculation, my answer should come as 600. Careful. Here some people may be confused that price index is nothing but GDP index, GDP deflator. 75. Which of the following is not true for personal income? It includes non-profit, yes. It is income received by household. It excludes return earning because personal income, when it comes from private income, undistributed profit is deducted. The answer of 75 is C for Chennai. Calculate APS. Acha beta, what is APS? APS is S by Y, saving. They have given consumption, they have given income. So I can find out saving. 1200 divided minus 300, 900 divided by 1200, 76. Answer should come out as 0.75. Chennai. Investment multiplier. I just showed you this equation over there. Del Y, this equation I showed you now. Same equation is required. Del Y is equal to 1 by 1 minus B into del I. So del Y is equal to multiplier on a capital K into del I. So multiplier means del Y by del I. Come on, tell me which one is the value before I say. Come on, try that. Will it be A? No. Will it be B? No. Will it be C? No. What is that? Del Y by del I. Answer should be D for Delhi. Clear? Pause it and copy. You could not understand. 78. Ratio between total consumption and total income. APC is equal to ratio between total consumption by total income. Answer should be B. When entrepreneurs are pessimistic, sir, one concept called business cycle. I believe you know that. Income time period. It is called upswing, expansion of economy, downswing, contraction of economy, peak or boom, trough or depression. So in the upswing, producers are optimistic. When it's downswing, producers are pessimistic. So what is the answer then? Pessimistic they gave. Which one is the answer? Will it be A? No. Will it be B? No. Answer should be C. Contraction means downward slope of business cycle. While using income method, which of the following is included? Windfall gains, gambling, no. Capital gain, no. Second-hand goods, can it be? Suppose 2023, you purchase one car by 5 lakh rupee. In 2023, it is included. 2024, you sell this car by 3 lakhs. Will it be added? Double counted it is, should not be added, right? The answer should be only D. 81. Calculate GDP. When sales is given, opening stock given, closing stock given, right? Slowly. Value of output is equal to what? Sales plus change in stock. Slowly. Write with me, it will be helpful for you. Sales is 750. Achha, change in stock is what? Closing minus opening. So 750 is 200 and 300 money. Minus 100. Yes or no? The value output becomes 650. Achha. Now GDP MP is what? Value of output minus intermediate consumption. The value output is what, beta? 650. How much intermediate consumption? 250. What is the answer? 400. Simple calculation. Correct? Check clear or not. 82. There are two concepts. One is called nominal GDP. Another is called real GDP. Nominal GDP is on current price. It does not give a true picture. Professor Mankiw, one of the greatest economists, he found out real GDP, which is at constant price. Say simple thing. These people say, na, P1 by P0 into 100. What does it mean? Inflation increases more than 4%. What is that? This is the basic things. Base price. On the basis of this, it is coming. It is applicable for real GDP. So 82 answer, nominal GDP is nothing but current price. C for Chennai. Achha. Now, in business cycle, there are different types of indicators. Different types of indicators. One is called leading indicators. Another is called lagging indicators. Now is called coincident indicator. What is leading indicator? Before something happens, it is showing. If stock price is diminishing, right? Slowly stock price is diminishing. So what does it indicate? Slowly you can see after a couple of days, slowly expansion of production is diminishing. Correct or not? Now that is leading. What is lagging? When real output is changing, then we got it as lagging indicator. Like CPI, after it is happening, real output is happening. CPI is diminishing. CPI means consumer price index. So the real output changes, real output with respect to price. Then we call it a lagging. When it is considering, coincidentally, it is called coincident indicator. So 83 answer should be what? Answer should be A for Ahmedabad. I repeat again, business cycle has got different part. One is called leading, another is called lagging, and another is called coincident indicator. Leading is stock price and all example which are given. Lagging is what? Real output changes, say CPI, unemployment and all. Your answer should be lagging indicator. Taxes on agriculture income is levied obviously by only state government. Government's direct production of economic good, that is electricity, public transport services, these are all what? Nothing but allocation function, B. Which of the following is not a characteristic of business cycle? Business cycle is this. Sorry, had it been like this, it's uniform. But it is practically not possible. So which one is the answer? Not a characteristic of business cycle. Carefully follow and answer me. They are recurrent, yes. They occur periodically, yes. They occur at regular intervals. They have distinct feature. Are they occurring as regular interval? No, na? So not a characteristic. Answer should be C. Which of the following is not an internal cause? Fluctuating investment internal cause. It is effective for internal cause. External cause is nothing but technology shock. So not an internal cause, but an external cause. Change in stock price, I just explained you. It is nothing but leading indicator. 88 answer is Bangalore. Excess of government excluding borrowing is termed as what? So there are three deficit. One is called revenue deficit. Revenue deficit is what? Revenue expenditure and revenue earning or receipt. Main thing is fiscal deficit. What is fiscal deficit? Total expenditure minus total receipt other than borrowing and other liabilities. Careful. There are three deficits. One is called revenue deficit, another is called fiscal deficit, another is called primary deficit. Here we require fiscal deficit. What is fiscal deficit? Total expenditure minus total receipt other than borrowings and other liabilities. So 89 answer is fiscal deficit. 90 is very easy question, which neither create liability or this. Answer is revenue deficit. 91. Which of the following apply interstate? Interstate money? IGST. What is that? Integrated Goods and Service Tax. I repeat, Integrated Goods and Service Tax, which is the main component of GST as on date. Within state, Bihar product goes to Karnataka, Karnataka product goes to Tamil Nadu. It is called IGST, important component of GST. So 91 answer is C. 92. Sir, income tax has got three parts. One is called progressive income tax, where if income increases 10%, tax increases more than 10%. One is called regressive tax. If income increases 10%, tax increases less than. One is called proportional tax. Both are same. The progressive developing country like India always applies progressive rate of tax so that they can earn more money from rich section and can spend money for lower class of people. So 92 answer should be what? A for Ahmedabad. 93. Non-debt capital receipt. Nothing but recoveries of loan and advances. 94. 94 answer is impact lag. Impact lag means when something is implemented but immediately you can't get the impact. So when outcomes of policy are not visible, it is called, which one is that? It is not decision, it is not this, and the policy in place of being implemented but immediately you don't get this impact. Answer is D for Delhi, impact lag. 95. The currency issued by central bank is known as obviously fiat money. If I give you one piece of paper, can you take it as 500 rupees? No. If I give on 500 rupees, it is authenticated by RBI governor, so it is called fiat money. 95 answer is C for Chennai. 96. Money multiplier, another important concept. Let me explain that. M is equal to small m into H. Capital M money, total money supply. Small m money, money multiplier. H money, high powered money. So small m is equal to capital M by H. Can I write better? The money multiplier, they are given 1.5. There has been increment of rupees 600 crore of money supply. Matlab 600 monetary base means high powered money they ask. So H is equal to what? 600 divided by 1.5. Answer should be 400. C for Chennai. Correct? Now 97. Narrow money. There are different types of concepts. It has come from money chapter. Money chapter unit 2. Narrow money means M1. C plus D plus OD. Then M2. M1 plus POSBD. Post Office Savings Bank Deposit. Then M3. M1 plus time deposit. Why I said this? Oh, sir, only M1 asked why you said this. Those are serious batch already understood why I am saying this. They ask you M1, matlab time deposit. They ask you narrow money. M1 is nothing but narrow money. Time deposit should not be included. So what are the things to be included then? Currency with public, yes. 88,000. Demand deposit with banking system, yes. D all. Time deposit, no. Other deposit, yes. Saving is post office, no, because it is nothing but narrow money. Correct or not? So what are the things to be included? 88,000 plus 2,20,000 plus 26000. Careful. Narrow money means C plus D plus OD. C stands for 88,000. D stands for 2,20,000. Time deposit not applicable. POCD not applicable. So answer, if we add this, answer is come out as B, 5,68,000. 98. Cap and trade system. It has come from public finance. Externalities. Sir, externality means what? Suppose thermal power station. They are giving you power, right? Very good. But this power is made from coal. So it emits pollution. Correct? So we are not producer, but we are affected. It's called negative externalities. So what does government do? Government has to restrict that. How? With some pollution control. One of the pollution control is cap and trade system. What is this? If they have to government has to issue one permit. You want to produce some amount of this, you have to take permit. The permit is valid for some certain period. If you cross this amount of limit, you should be penalized huge. And every after certain period, like mediclaim, every after 1 year you have to renew that. So if you want to continue production, you have to renew this. Cap system is tradable permit. Trade system is that tradable permit has to be renewed every interval. The answer of this is cap and trade system for externalities. So answer should be 98B for Bangalore. 99. Which constitutional body maintains fiscal federalism in India? Of course, it is Finance Commission. Which of the following is not a characteristic of money? Money is what? Money is what money does, beta? Correct or not? Function of money, you know that. So, characteristics. It is recognizable, yes. Really acceptable, yes. Easily transportable, yes. Easily reproducible by people, how? Can we produce money? No. It is a job of Government of India and RBI. The answer should be D for Delhi. So my dear students, I believe on behalf of BEI, if when I explain this full answers of CA Foundation question, I have not only given answer, you understood that if you have watched this full video, all reasoning and logic also I have given that, and calculation wherever it is required I have given, which portion it has come, it is also given. I believe it is helpful for you. So, on behalf of BEI, Sandip sir, my name is Sandip sir, I am signing off. We'll include with this video full question bank as well as answer script. If you like this lecture, if you prefer this explanation, then put your comment where to explain. If you need anything more, put your comment over there so that it will be encouraging for us. So beta, thank you very much. So with your permission, let me sign off. God bless. Take care.